Hey everyone, welcome back to Next Vault. Today we're diving into one of the most anticipated IPOs of the decade, Stripe. It's the invisible payments powerhouse behind millions of online businesses. And now, after years of rumors, it's finally preparing to go public. But is Stripe going to be the next Visa or the next overhyped fintech flop? Let's unpack where Stripe came from, why it's so valuable, and whether its stock could be a smart investment or a trap. 1. What is Stripe? Founded in 2010 by Irish brothers Patrick and John Collison, Stripe started with a simple mission: make online payments easy for developers and businesses. Today, Stripe processes hundreds of billions of dollars in transactions every year for companies like Amazon, Shopify, Lyft, Google, Airbnb. Its product suite has grown far beyond payments, billing, fraud prevention, financial reporting, even issuing corporate cards. It's basically becoming the financial backbone of the internet. 2. The private valuation journey. Stripe has been a Silicon Valley darling for over a decade. Key milestones: 2014, valued at 1.75 B. 2021, valued at 95 B, peak private market hype. 2023, valuation reset to 50 buys amid fintech slowdown. 2025, latest funding round, values at near 100 B, again ahead of IPO investors, include Sequoia Capital, Andreessen Horowitz, Elon Musk, and even Ireland's sovereign wealth fund. 3. Why the IPO hype in 2025? Explosive e-commerce growth. Even after pandemic highs, online retail keeps growing. Stripe gets a cut of every transaction it processes. AI-powered fraud prevention. In 2025, Stripe launched a next-gen fraud detection tool using generative AI, cutting false declines for merchants by over 40%. Global expansion. Now active in 50-plus countries, Stripe has deep penetration in Asia-Pacific and is targeting Africa and Latin America, fast-growing markets with rising digital payment adoption. Bank partnership. Stripe is now working with big banks like JP Morgan to integrate crypto custody and stablecoin payments. 4. Stripe's business model and financials. Revenue streams, transaction fees, majority of income, SaaS subscription fees, billing, invoicing, tax, value-added services, fraud prevention, lending, banking APIs. Estimated 2025 revenue, 18 BYOY growth, 23%. Profitability, still investing heavily in R&D. Operating margins below Visa, Sochi, MasterCard, but improving. 5. Competitive advantage, developer-first approach. Stripe's APIs are famous for being easy to integrate. Global network, merchant onboarding in over 135 currencies, product ecosystem, merchants often adopt multiple Stripe products, boosting retention. Brand trust, backed by the world's biggest tech companies. 6. Risks and challenges. Valuation risk. IPO expected at a 100 B market cap. That's like 6 revenue, higher than most payment processors. Rising competition. Adyen, PayPal, Square, and even Shopify payments are all gunning for market share. Regulatory headwinds. Payment firms face increasing scrutiny over fraud, crypto transactions, and data privacy. Economic sensitivity. A slowdown in consumer spending could hit transaction volumes hard. 7. Final verdict. Should you buy Stripe at IPO? Bull case. Market leader in a fast-growing sector, expanding globally and diversifying products potential to rival Visa and MasterCard in the long-term. Bear case. Rich valuation for a payments company. Margins still lag traditional payment giants. Needs to prove sustainable profitability at scale. So, will Stripe's IPO be the fintech event of the decade, or will it be another overpriced tech stock investors regret buying? Drop your thoughts in the comments. Are you buying day one, waiting for a dip, or staying away entirely. And if you enjoyed this deep dive, hit that like button, subscribe, and turn on the bell so you never miss the next vault breakdown. Thanks for watching, and I'll see you in the next one.